Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to have you here as we dive into the action from today's market session on March 16th, 2026. It's been a roller coaster of a day with some big moves, geopolitical tensions, and plenty of chatter around AI and energy. So, grab a coffee and let's unpack what's driving the markets for us long-term investors, while also keeping an eye on the short-term waves. First up, let's talk indexes, because we've got some serious green on the board today. The Dow Jones jumped over 500 points, a solid 0.83% gain, while the Nasdaq climbed an impressive 1.22%. The S&P 500 wasn't far behind, up 1.01%, and even the Russell 2000 joined the party with a 0.94% increase. What's fueling this bounce? Well, a pullback in oil prices after recent spikes seems to have calmed some nerves, giving stocks a breather despite ongoing geopolitical noise. For us long-term folks, this kind of recovery signals resilience, but we've got to stay sharp. Volatility isn't going anywhere. Zooming in on the S&P 500, we're seeing a nice rebound after a rough patch last week. Despite a recent 3-week losing streak, today's uptick suggests buyers are stepping back in. Analysts are mixed, though. Some warn of a potential 10 to 15% pullback due to rising oil and inflation risks, while others see this as a dip to buy. As long-term investors, these corrections can be golden opportunities, but timing matters. Keep your watch list ready. Over on the Nasdaq, tech is leading the charge today with a strong showing. This index is often a bellwether for innovation-driven growth, and today's gains hint at renewed confidence in the sector, despite broader market jitters. For those of us building wealth over decades, tech remains a core pillar, but remember to balance with diversification. Those short-term swings can sting. Now let's check out the big winners among large caps. Micron Technology surged nearly 4%, riding the AI and data center wave, while Lam Research and Southern Copper also posted solid gains around 3.5% each. ARM Holdings and Petrobras caught attention too, up over 5% and 4% respectively, showing strength in tech and energy. These moves highlight where capital is flowing right now. AI infrastructure and commodities are hot, and for long-term portfolios, these sectors could be worth a deeper look. On the flip side, we've got some notable decliners. CrowdStrike took a hit, down over 4%, possibly on profit-taking after a strong run. Nutrien and CF Industries also slid, down around 6% and 5.5%. Reflecting pressure in agriculture amid broader economic uncertainty. These dips might spook short-term traders, but for us focused on the long haul, they could signal undervalued entry points if fundamentals hold up. Looking at the market movers, Nvidia continues to dominate with a 1.6% gain and massive trading volume, underscoring its role in the AI boom. Amazon and Tesla also moved the needle, up nearly 2% and 1% respectively, showing consumer and EV strength. These heavyweights often set the tone for the market, and as long-term investors, tracking their trajectory helps us gauge where growth is sustainable. Speaking of volume, the most active stocks today tell a similar story. Nvidia again tops the list, alongside Intel and American Airlines, showing where investor focus is locked in. Smaller names like Plug Power also saw heavy trading with a 4% pop, hinting at speculative interest in alternative energy. Volume spikes like these can signal short-term momentum, but for our strategy, they're more of a temperature check on market sentiment. Now let's pivot to the broader economic picture, because there's a lot stirring the pot. Geopolitical tensions, especially around the Strait of Hormuz and the ongoing Iran conflict, have kept oil prices volatile, though they eased a bit today. This helped stocks recover, but experts warn the situation could halt the rally if it escalates. Meanwhile, a potential delay in the U.S.-China summit didn't faze markets much, suggesting trade truce hopes are still alive. For us long-term players, these macro events remind us to stay diversified. Global risks can't be ignored. Over the past week, some large caps have really shown. Garmin led with a massive 21% jump, while Lumentum Holdings and AppLovin both gained around 15%. Shopify and Occidental Petroleum also impressed, up over 14% each. These weekly trends can point to emerging themes. Tech and energy are clearly on investors' radar, and for long-term growth, these could be sectors to overweight if valuations align. Conversely, the past week saw some heavy losses. Genuine Parts dropped over 20%, while Rivian and Blue Owl Capital shed around 14% each. Okta and Bridge Bio also struggled, down 12 to 13%. These declines might reflect sector-specific headwinds or broader risk-off sentiment. As long-term investors, we look at whether these are temporary setbacks or signs of deeper issues. Patience can pay off here. Shifting gears to earnings, this week's calendar is packed with heavy hitters. We've got Oracle, Hewlett-Packard Enterprise, and Adobe reporting, alongside retail names like Dollar General and Dick's Sporting Goods. Last week, Costco and Broadcom posted results, with whispers of solid numbers that could influence sector sentiment. For us, earnings season is a treasure trove of insights. Focus on how these companies talk about future growth, not just the quarterly scorecards. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into what management is saying about the road ahead. Lastly, let's touch on sector performance over the past week. Industrials topped the list with a 2.1% gain, followed by consumer cyclical at 1.62%. Energy also stood out, up 4.62%, likely tied to oil price swings. These sector moves can guide our long-term allocation. Industrials and energy might offer stability and growth if global demand holds. On the weaker side, healthcare lagged with a 0.62% drop, while utilities and financial services also underperformed, down slightly. These sectors might face near-term challenges, but for long-term strategies, they often provide defensive balance. Don't write them off just yet. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope you found some actionable insights for your portfolio. Be sure to stick with us for daily updates, deep dive SWOT analyses, and more to keep your long-term wealth-building game strong. Hit that like button, subscribe, and we'll see you tomorrow for the next market breakdown.